want to now bring in with his take on Egypt, Jim Awad, Managing Director at Zephyr Management. James Frischling is with me here on set as well. And Jim, I want to go first to you about the risk to emerging market portfolios. Right now, this is a true example of how these can be risky investments for Americans.
Well, in the short term, there's a high correlation of all emerging market stocks. And so this would be, to the extent that you have instability in Egypt, it would be a negative. But understand that the real emerging market story long term is Asia, China, India, Latin America, that these, the Middle East, while not unimportant, are not important growth markets for emerging markets. So I think they could be disruptive in the short term without damaging the long-term story for emerging markets. And of course, some of it depends on the process. Is the process of change orderly, or does it become brutal with a chance for an accident and people killed? And that would exasperate any short-term pressures. But the important thing to understand is the stocks may get down short-term, but the emerging market true growth story, the Middle East, is not key.
James Frischling, do you agree with Jim's take on what's happening and that kind of that short-term perspective?
I actually do. I think the reason why U.S. investors should care about this is I think we've been touting and watching the companies with global franchises, global distribution channels, people that are putting things on the ground. So to a certain extent, every U.S. investor needs to understand companies like McDonald's, GE, P&G. These all have great emerging market exposure. But to Jim's point, the Middle East, candidly, is not one of the big drivers as opposed to as compared to in Asia or Latin America.
It is, but at the same time, Jim, your firm had a very strong eye on the Middle East, and you and I traveled to Syria together, but also other parts. You've been actually putting a lot of deals together over there in the last year since we got back.
Well, we've done a lot in Africa, and of course, part of Africa is in the northern in Morocco and part, but not the hotbed Middle East that we're talking about here, where you and I visited, and the peripheral countries. We are looking for opportunity in those areas. We went to Syria and the Palestinian areas and Israel, and we think there's tremendous long-term opportunity in those countries if the geopolitical situation improves. As we speak now, there's a lot of uncertainty. You can have two outcomes. You can have a pluralist democratic outcome or an Islamic outcome, and so one of those will be good for investment, one will be bad. So we're watching.
And that young consumer, which is what a lot of companies have targeted, which we're seeing the unrest now in Egypt, it is that young, that 22-year-old young man. He's looking for new toys. A lot of American companies targeting that man, but that man is now targeting the president of Egypt. We're going to take a quick commercial break. We're going to come back. We're going to continue our discussion about the issue of emerging markets, how this can affect your portfolio, and the latest news breaking out of Egypt. Stay with Fox Business. Dow is down. Jim Awad, your perspective on this?
My perspective is you got to watch the process and the outcome. If the outcome is like we had in Tunisia, that long-term is a positive because you have a democratic, pluralistic society. If the outcome is a religious government that's hostile to the United States, it's a negative for a lot of reasons, strategically and for our companies. The process, the longer it takes, the more violent it gets, the more it has the potential to aggravate the financial markets and back into the world economy.
Overall pressure, Jim Frischling, to the emerging markets is what Jim is saying, which is a valid concern right now.
And I also think we've had such a tremendous rally, and the markets seem to have stalled just around 12,000. This is a real issue and a great reason to be taking money off the table, at least in the short term.
All right. Well, it seems like we are seeing that response today from the markets, commodity side and the equity side. Gentlemen, thanks to both of you. James Frischling, I call you Jim, and of course Jim Awad. Thank you, sir, for joining me today. It was great for you to come over and help me with all of this. We're going to